Primary market, functions, intermediaries and types of issues. This section defines the primary market, clarifies its critical functions in the economy, and identifies the different ways issuers raise capital along with the key players involved. Definition and function of the primary market. The primary market, also known as the new issue market, is where equity or debt capital is raised by issuers from public investors through the first-time offer of securities. This process of enabling a business to raise capital from the public is called going public. Capital mobilization. It facilitates tapping a wider market for capital requirements, shifting from closed sources of funding, like promoters and banks, to new public investors. Price determination. Securities are issued at a price determined by supply and demand, ensuring a competitive and fair pricing mechanism. Liquidity creation. It is mandatory to list a public issue on a stock exchange, which opens the secondary market and provides initial liquidity for the newly issued securities. Corporate governance. The act of going public diversifies ownership, leading to more professional management and adherence to rigorous regulatory supervision and better disclosures. Exit route. It provides an important exit route for early-stage investors, like venture capitalists and promoters, to sell their stakes and realize a profit. Intermediaries in the primary market. The issuance process is managed by various specialized intermediaries who must be registered with SABI. Lead managers, merchant bankers. These entities manage the entire issue process, including advising on pricing, preparing the prospectus or offer document, applying for listing, and managing allotment. The book running lead manager, BRLM, is responsible for due diligence and finalizing the basis of allotment. Underwriters. They provide a commitment to subscribe to the issue if it fails to receive full public subscription. Usually a minimum of 90% is required. Registrars and transfer agents, RTAs. They maintain records of applications, assist in determining the basis of allotment, process allotments, and handle refunds. Debenture trustees. Appointed for debt issues to safeguard the interests of debenture holders. Bankers to the issue. Appointed to collect application forms and manage the sale proceeds from investors, later transferring the funds to the issuer's account. Types of issues. Issuance of capital. Primary market issues are categorized based on who the security is offered to. Public issue. Securities are offered to the general public, and anyone eligible to invest may participate. Private placement. Securities are offered to a select group of institutional investors and other eligible investors, typically making it a wholesale, less time-consuming, and cost-efficient process. Preferential issue, allotment. Securities are issued to an identified set of investors on preferential terms, such as promoters or strategic partners. Rights and bonus issues. Securities are issued exclusively to existing investors.